This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everyone. Welcome to Bloomberg Business Week Daily on this Tuesday, August 11th, 2026. I'm Tim Stenovec. Carol Massar is out today. We've got Kristine Aquino here in her place. She's managing editor of the Markets Live blog on the Terminal. Kristine, it is a perfect day for you to be joining us because there's a lot that's on our radar.
There is a lot, Tim. I mean, talk about Nvidia financing and a question about circular funding. And then, of course, the latest developments on the U.S.-Iran deal. Is there a deal? Is there no deal? What is happening? And lots of stories, of course, what retail investors are doing with ETFs. I mean, so much to talk about.
Yeah, this is exactly what we're doing over the next hour. As far as markets look, stocks are under a little bit of pressure ahead of that key inflation report tomorrow. We've got oil higher as traders parse the latest commentary coming from Iran. Kristine mentioned that we're digging in there a little bit. Josh Wingrove is going to be joining us in just a few minutes. He's going to help us make sense of what exactly is happening in the Strait of Hormuz. This as President Trump says it's 100% open, while Iran says it's shut. Also, Kristine mentioned that huge $500 billion in funding that Nvidia spoke about yesterday. We're learning more about what that funding actually looks like and also what it's doing for shares of alternative asset managers. We're going to be speaking about alternatives with JP Morgan's Aaron Mulvihill. He's going to be joining us in just a few minutes. Also, the CEO of eToro is going to stop by just after reporting earnings. Got to check on what exactly retail investors are doing on the platform right now. All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Charlie Pellet is standing by. Hey, Charlie.
Well, hello there, Tim and Kristine. We are kind of in a holding pattern ahead of the CPI report tomorrow morning. It drops 8:30 a.m., and we'll have the number for you, special coverage, lots of reaction. Everybody's going to be talking about that tomorrow morning. Right now, the S&P trading lower, little change, still close to a record, but yes, lower. Down 18 now, 77.34 on the S&P, down by about 0.2%. Investors refraining from making big bets. The Dow now down by 100, even drop there of 0.2%. NASDAQ Composite down 146 for NASDAQ, a decline of 0.5%. NASDAQ 100 index down 0.3%. The Bloomberg Mag 7 index down now by 0.7%. However, the SOX, the Philadelphia Stock Exchange's semiconductor index, holding on to a gain of 0.4%. The 2-year 4.22%, the 10-year ahead of CPI 4.68%, the 30-year 5.23%. Gold, $43.67 the ounce, down 0.5%. West Texas Intermediate crude oil up 1.3%, $83.18 a barrel. Brent, the global benchmark, pushing higher as well, $88.78 for Brent, up by 1.2%. California's Attorney General Rob Bonta is calling reports that Paramount Skydance plans to leave the state if its top lawyer does not settle a lawsuit challenging the company's planned merger with Warner Brothers Discovery is a blackmail. That in a post on social media. Now, a source says Paramount's board has approved a possible move from California as early as October 1st. Today, we're seeing Paramount Skydance shares down 0.6%. Warner Brothers Discovery up by 1.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. And that, Tim and Kristine, is a Bloomberg Business Flash.
Charlie Pellet, thank you for that update. We're, of course, going to be checking in with Charlie throughout the next hour for the latest coming from the markets and business news. On that, if you want to talk to Charlie, if you want to talk to us, if you have questions for any of us, you can ask us questions. Our guests, too. Shape the interview. Just go to Bloomberg.com/AskRadio. This is exclusively available to subscribers of Bloomberg.com and the Bloomberg Terminal. We've got a great special coming up on rare earth and critical minerals in the 4 p.m. hour. Great group of folks joining us. Ask questions about that. Bloomberg.com/AskRadio. Well, I think traders, I think it's fair to say, are asking questions about what's happening in the Strait of Hormuz. We're getting conflicting signals. Pakistan's defense minister said the U.S. and Iran are, quote, close to some sort of arrangement over the Strait of Hormuz, even after both sides appeared to harden their positions in the long-deadlocked negotiations. Meantime, Iran says the Strait of Hormuz will remain shut until Iran's conditions are met. And a reminder, just yesterday from the Oval Office, the president said the Strait is, quote, open now, quote, the U.S. is the only one that has control of Hormuz, and, quote, we control the Strait 100%. Josh Wingrove is going to help us make sense of this for us. He's Bloomberg News White House reporter. He joins us from the White House. So, Josh, clearly very different things are happening based on what the president, given what the president is saying, what the oil markets are telling us. What is happening in the Strait right now?
I mean, you guys say that I can help you make sense of it. I like to underpromise and overdeliver. Okay. So let's just maybe dial that back here. I don't think anyone really knows. I mean, clearly the risk factor for a lot of shippers is just simply too high, whether the president insists that the Strait is open or not. And so that's why we continue to see sort of these weather vane type statements from the administration and the president on a day-to-day basis. And so as I stand here today, we really have not heard more from the administration since yesterday, when the president both was downplaying the current standoff, saying he's comfortable with the status quo in the Strait, and moving the goalposts and saying that, hey, now I want sort of compensation too, or reparations of some kind, after reports that Iran was seeking the same. And so we have this sort of dueling goalpost shifting, the president backing off his threats from a week ago to sort of, hover his finger over the button of some massive new offensive by American military forces. And so we seem like we're in the status quo for a little bit, and that's why people are reading into the Pakistani government statement so much, that, is that sort of rose-colored glasses on their part as one of the sort of intermediary nations here? Or is it the straight goods that's sort of cutting through the posturing and positioning of the two sides? We simply don't know. But for President Trump, of course, the stakes continue to be high, right? His polling remains very low. Gasoline prices are high and have been sort of trending upwards. Remember, Treasury Secretary Scott Bessent was talking about $3 gasoline by sort of middle of September. We are a long way from that. And so the risk, of course, for the president is that Republicans will pay a political price come November in those midterm elections if things don't come to some sort of normalization soon. But of course, as you say, Trump is insisting it's already there. So,
yeah, very interesting, Josh. I mean, yeah, again, you mentioned that's such a good point, right? There's a lot of domestic pressure for the president to really get a deal done before those midterms. How much pressure is he under, and what could be the risk if there is no concrete deal by the time we get to November?
It's a lot of pressure, and I think there's some notable comments. President Trump talks a lot. It's my job to try to keep up with it. I don't always succeed. I don't know how anyone really does. But one thing he said to Punchbowl, I believe, a day or two ago was, downplaying kind of the role that he will play in the midterm elections at a time when the White House has been sort of teasing that he would get out on the road more and start campaigning for folks. And Trump saying, look, I won my election, and these congressional colleagues, it's up to them to win theirs. Now, that could be, Trump. That could be an offhand comment, but it could also be a sign that he's starting to distance himself from the results. Remember, when Republicans got their clocks cleaned in 2018 in those midterm elections, at least in the House, Trump chalked that up afterwards, saying, hey, I wasn't on the ballot. My voters only show up when my name is on the ballot. And of course, that is not the case in midterm elections. So I think we'll be watching to see if that continues to be the case. Is that just an offhand comment from the president, or is he starting to sort of back away a little bit, not wanting to own what may or may not be the electoral results for the Republican Party in a few months, given where these things are going? We should note, the president continues to have high polling within his party. Republicans are generally satisfied with him, but nationally, including, of course, with Democrats, but also independents, his polling is very low, generally at or near all-time lows, including as compared to after the January 6th situation. So I think that is sometimes lost in the shuffle here. This is a president who looks like he's on politically choppy waters, but is trying sort of to happy talk up the situation both in the Strait and with the American economy generally.
What's the narrative, Josh, that's emerging from different members of the president's administration around this? There has been reporting from the New York Times in recent months about the way that Vice President Vance felt about the U.S. Going to war with Iran alongside Israel. And I'm just curious if the administration and members of the administration are sort of staying on a consistent message about the timeline of this, or is it all being deferred to the president?
I think he is increasingly the public voice on this. And I think one way to read that is sort of a hesitance on the part of others. They don't want to seem like they're disloyal to the president, of course. Vice President Vance has been loyal to the president on it, but of course was a strong voice against sort of interventionism abroad. And so we have not heard a lot from the vice president on this war. He said over the weekend that we're sort of still in the middle of the game on this. And others, haven't really been leaning in on it, including the Secretary of State. And so we'll see where it goes. This is not to say that any sort of, showdown at the OK Corral is coming up in this administration. I mean, they remain behind the president, but they are in the middle of the game, as the vice president said, and we just simply don't have any indication as to what the next steps or path from here will be. The president has been de-emphasizing it in his remarks. So, it seems like something he doesn't really want to talk about. That's where we're at. But everyone's been talking today in Washington about that plane story from overnight. That's from the Washington Post, our friends over there. That's been one of the crazy things. And, of course, an Iran link to that as well.
Okay, so let's end there, Josh, because that is something that, I saw this cross late yesterday, and it's completely wild. What can you share with us about that trip from Turkey and the threat that at least the Secret Service felt was viable coming from Iran to force such an evasive maneuver and really keep us and keep you in the dark for a month about this?
Yeah, let me just also note, Tim, it's not your question making me sweat, it's this DC swamp, so forgive me.
August in DC,
I'm
it's all
pouring
good.
sweat over here, so I hope, it's live television. We're doing it.
It's all good.
The president his public story was that he was switching, well, not even public story, but the story, at least until 24 hours ago, was that he switched planes in part over the defensive capabilities of the new gifted Qatari jet, which the New York Times reported did not have the same kind of defensive capabilities of the sort of outgoing legacy Air Force One jet. But then this report, of course, was that there was a third plane entirely, that the president got on the legacy Air Force One and then was snuck off in a catering cart to another plane, and that the main Air Force One went on unbeknownst to people on it, including his staff and, of course, Air Force staff that staffed it and the press that were on board, while the president was actually on another plane. Now, the administration has not confirmed this publicly. They've not really commented on it either. But I guess you would say that the argument is there that there was some kind of threat. The criticism, of course, is that threat was not relayed to the people who were on that plane, who now look to have been sort of more squarely in harm's way. And so a lot of questions swirling about how this was, came to be. But the president has not commented on it. I want to see a photo of this catering cart, Tim.
Yeah, I do too.
There's a lot of elements to this.
Yeah, well, maybe we'll have to hopefully, fingers crossed, we can get that. Josh Wingrove, get into some air conditioning. We appreciate you hanging out in the swamp to join us here on Bloomberg Businessweek Daily. Investors squarely focused on the latest out of Washington, D.C. They're also focused on this idea of what's with the circular funding and circular financing, and where do alternative assets fit into this? We've got Aaron Mulvihill with us, global alternative strategist at JP Morgan Asset Management. He joins us here in the Bloomberg Businessweek studio. Perfect timing. You've got this new report out, but it comes the day that we're learning more about this $500 billion commitment that Nvidia is getting from some of the largest alternative asset managers. It fits kind of squarely into what you have in this guide to alternatives. How does it fit in there?
It does, Tim. One of the biggest themes we have right now with clients that's coming up in every discussion is the amount of AI and technology exposure that's in every asset class, right? Not just the public markets. We're well aware the S&P 500, you've got 40+% in the Mag 7. You add up all the utility companies, everything else, you're getting to 60% of the S&P moving on this AI theme. But now also private markets, we're seeing that ramp up in private credit and private equity with a lot of data center investment as well as other parts of the AI cycle.
Yeah, well, Aaron, seems like everything's going well and dandy, right? Everyone's making money off of this based on the latest financing deal that we're seeing. But, the fear over circular funding was a big theme over the last couple of weeks or months or so. That seems to have petered off now that tech stocks are back. But when does that risk come back to fore again, especially in private markets where it's a little bit more esoteric in terms of valuations of assets in that sector?
I think the broader risk, Kristine, is this concentration in a singular theme. So everything is AI wherever you look, whether it's the public markets, the stock markets, increasingly the bond markets. A report from JP Morgan's investment bank is expecting $2.1 trillion of issuance in investment-grade bonds to fund the AI build-out over the next couple of years. And so it's increasingly important for investors to be active, to work with active investment managers and asset managers who can diligence these increasingly complex bond issuances, stock issuances, as well as choose how much they want to be allocated to this particular theme across public or private markets.
Are there alternatives that are not exposed to AI right now?
Nobody wants.
They're few and far between. You don't want to be in the private credits that's exposed to software. It seems like.
Software has definitely had a pullback in the last couple of quarters. I would say in software, even in private credit, we're not really seeing a deterioration in performance. It's more concerns about what the future might hold for software as AI starts to maybe eat into the ability to create code, create competitors to software companies. But we're not really actually seeing this in performance today. When we think about alternatives, people don't want that sort of broccoli diversification of low returns. So where do we look for higher returns? We like the real estate market right now, commercial real estate. I would say it's important to be mindful of an increasing amount of digital infrastructure in the real estate space, the data centers. So that's a question you can ask. But I think what's important to keep in mind when you're investing in private markets, private funds, is portfolio managers have an incredible amount of discretion into how they build those funds up. They don't need to follow a benchmark. They're not following the S&P 500. So they can deviate and they can choose how much data center exposure they want to have, if they want to completely avoid data centers in a real estate fund. And there's plenty of parts of the real estate market that we see as being very attractive without having to add to exposure in digital.
Yeah, well, speaking of kind of preferences between this theme, I know that your group in particular actually prefers the electricity layer over the data center story at the moment. What is kind of the appealing aspect of that narrative that is perhaps underpriced by investors at the moment?
There's a strong case to be made for the electricity layer of data center investing, and I think it comes back to that theme of investors wanting some exposure, but not necessarily the volatility that comes with direct investment into AI theme. And so when you look at the power layer, we expect that electricity prices are going to continue to increase. We expect more consumption of power by the data centers. They're going to be 12 to 13% of the total US power supply within 3 years. So a lot more power, a lot more consumption, but it's not the only thing driving the performance of infrastructure funds or private infrastructure funds, because you've also got electric vehicles, you've got the electrification of the economy, you've got moving towards renewable energy, the need to replace the grid. All of these things can benefit the funds and their performance without having to be completely reliant just on the AI theme.
Can you talk a little bit about shipping? Because this is a really interesting theme that comes up in your report.
It is, and it kind of, we're talking a lot today, of course, about Iran and the Strait of Hormuz, and shipping's an interesting one. To me, it's a little bit like surge pricing. If you're trying to come from downtown to here, the FDR is blocked off, then you've got to take a long way around. That's what we see in shipping, and so transportation companies are actually benefiting from these geopolitical issues, from what we're seeing.
And you think that's sustainable? In the sense of like, this is going to be ongoing for a significant period of time.
One, it comes down to how long the war is going to continue, but we've had an increased incidence of geopolitical issues over the last several years. If we close this war, there's going to be another issue before long. That's just sort of the nature of the world we live in. But another factor that's beneficial to the shipping industry, if we put that aside, is the fact that there's not a lot of idle capacity out there. There's less than 2% of the global shipping fleet today is idle. And so kind of back to the taxi analogy, there's not enough taxis to go around. And again, we have this issue of surge pricing, higher transportation costs, and that's benefiting the transportation operators.
We even spent some time yesterday talking about the Jones Act, given the news from the White House there. Aaron, it's always good to see you. Thanks so much for joining us on Bloomberg Businessweek Daily. Aaron Mulvihill is Global Alternative Strategist at JP Morgan Asset Management. That new report, a Q3 guide to alternatives, it's sent out to 250,000 financial advisors. Well, coming up next, from alternatives to what retail investors are doing, the CEO and co-founder of eToro joins us next on Bloomberg Businessweek Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ, all trading lower. S&P right now down 26 points, down 0.3%. When you run the GIP screen on the Bloomberg, right now just about the lows of the day on the S&P 500 index. Traders, however, are refraining from making big bets on stocks and bonds ahead of the CPI report. That drops 8:30 a.m. tomorrow morning, Wall Street time. Again, the S&P down 3 0.3%. We've got the Dow also down by roughly 0.3%. Should point out that the S&P 500 index does remain very close to a record. NASDAQ right now down 189 for the NASDAQ Composite Index, down 0.7%. NASDAQ 100 Index down 0.5%. The SOX, the Philadelphia Semiconductor Index, it is up 0.3%, well off session highs. All of this with the VIX coming in just above 15, the 2-year 4.22%, 10-year 4.68%, and the 30-year 5.23%. Gold, meanwhile, down $27 the ounce, $43.63 the ounce. It is down 0.6%. WTI 83.01 a barrel, up 1.1%. Brent, as traders keep an eye on developments out of the Strait of Hormuz, 88.70 for a barrel of Brent, the global benchmark, up now by 1.1%. A sign of the times, with Spotify saying it will soon begin identifying artist profiles created by artificial intelligence with a new AI personas label in an effort to bring more transparency to listeners about who is behind the music. The world's largest music streaming service says it wants customers to know which artists are real humans and which ones are artificial. Shares of Spotify trading down now by 2.2%. Kristine and Tim, that's a Bloomberg Business Flash.
Thank you, Charlie. Appreciate that. I'm looking at shares of eToro Group. They're lower today, actually having the biggest decline ever, down about 13%. This after the fintech company reported revenue from crypto assets for the second quarter that missed the average analyst estimate. Also, big news, it announced to buy TradeZero, based in Brooklyn, for up to $231 million. We've got with us Yoni Assia, the CEO of eToro. He's back with us here in the Bloomberg Businessweek studio. So the numbers, you were saying you had a good quarter, and this is an acquisition that you think is the right move, obviously, at the time. What's the market getting wrong about this?
Well, I can't control the markets. I can control the business. Q2 was another beat quarter. Great 9% growth year over year of both top line and bottom line. 18% exceeding actually market expectations of funded accounts. Huge roadmap coming in across AI in the company. We actually released a new app, which is taking the old app and rewritten 100% with AI focus and center around Tori AI agent, which is the Grok frontier model. And we were talking now about Dan Pipitone from TradeZero and the team, a great team joining us here in the US to lead eToro in the US with the TradeZero acquisition.
Yeah, let's talk about the TradeZero acquisition.
Yeah.
Dan's been on our program. I used to speak to him all the time just a few years ago. So certainly a familiar name to our audience. Why buy TradeZero rather than build something internally? Like, what does bringing on TradeZero do for eToro that you couldn't offer U.S. customers before?
Sure. So when you look at our business, the vast majority of our business is outside the U.S. We have a huge franchise, Europe, UK, Australia, Singapore, Abu Dhabi, and the U.S. a bit got left behind, sort of the rest of the world for us, where the big part of the business is. What this brings is, one, a great team based here in Brooklyn, in the U.S., with a significant also franchise, $80 million revenues, and a lot of knowledge and experience in U.S. capital markets infrastructure. So a lot of the great products that we actually have outside the U.S., which include leveraged stock trading, long-short. On top of long-short trading, we actually created quantitative smart portfolios, which create hedge fund-like strategies, market-neutral strategies outside the U.S. So all of these products operate and work for eToro outside the US. And we believe that together with TradeZero, we can actually bring all of these products, including futures trading, which is a lot of our customers were trading oil, gold, silver during during Q4, Q1. So all of these products will now be enabled to our customers through the integration with TradeZero.
Yeah, how are you planning to kind of differ your approach when it comes to dealing with your international clients? Because, I lived in London for almost 10 years, and the average retail investor there tends to be more conservative. They tend to prefer physical assets, whereas U.S. investors are really just very much into this. And so, how would you kind of differ the approach now that we're looking at a broader base of international clients?
So I think this actually shows the huge opportunity that we have, right? So eToro has been hugely successful outside the U.S. and places like Germany, Spanish, France, Italy, the UK, across multiple, by the way, both geographies and products, 24/7 trading of both stocks from 26 different capital markets, of commodities, indices, currencies, as well as investing, copying the top traders all around the world. We actually feel our products have a huge untapped market here in the US, but until 2025, until the IPO, basically, we just took a step back, waited actually for also the crypto environment to be the right environment here in the US, and together with the Trade Zero acquisition, we were going to double down on the US market, introducing our US customers and US customers to basically the global community and the collective intelligence in eToro.
You mentioned AI, and one thing that we're increasingly hearing more about is agentic trading. There was a great piece in Bloomberg just last week. A big take. Everybody should check it out if they haven't already, about the way that some retail traders are harnessing this technology. eToro is allowing customers to use AI agents to trade autonomously, but that's within certain defined parameters. Give us an update on adoption and activity that you're seeing thus far.
So first of all, just yesterday, we launched an official connector to Grok. So we have a great partnership with SpaceX. You can actually go now to Grok and click search for eToro, connect your eToro account, click. It opens basically an eToro single sign-on, and then Grok suddenly has visibility into your entire portfolio, into the portfolio of all of the rest of the traders in eToro, and into the X feed. So you can ask something like, look at my portfolio, look at my X post, tell me what I'm missing in my portfolio. Now we've launched Tori, our own AI agent, a while back, which is also based on Grok. We launched also now Claude MCPs, and we are seeing more and more users are actually connecting AI. There was one missing piece which we launched about 2 months ago, which is sub-accounts, or we called it agent portfolios. A lot of people, including myself, were afraid to connect their entire account into AI. Now you can actually connect it just to a sub-account, to an agent portfolio, and say, let's say I have $100,000 in my portfolio. I want $5,000 invested, and I want this now AI agent to manage my portfolio autonomously. Now, the beautiful thing about AI agent is they never sleep. You can train them basically on everything. By the way, AI agent goes every day to universities across the globe, downloads research papers on behavioral economics, connects the data in eToro, and runs back tests on actual proprietary data of eToro. So we're seeing things that up until 2 years ago, only people in places like Renaissance and Millennium could do. Suddenly we're doing it with our own quants, and we're building those tools for our customers to run basically quantitative trading and agentic trading as well. I believe this is just the beginning of that, and that is going to actually surpass the amount of trading activity of people on eToro by the end of next year.
Wow. Okay.
Yeah. All right. Well, let's talk about prediction markets as well, because that's another growth area for a lot of companies like eToro. It's surging in popularity. What sort of opportunity does that present for your company moving forward?
So we announced another acquisition in Q2, which is Zengo. It's a non-custodial wallet in the US. It's a great opportunity. It's a regulated market. Outside the US, a lot of the prediction markets actually operate in the DeFi world in non-custodial wallets. Zengo is a firm actually run by a great founder that was actually a VC that I pitched eToro to 20 years ago. And now sort of working together, we've launched prediction markets in a DeFi model in a non-custodial wallet. It took us, by the way, 2 weeks from closing the acquisition to actually launch the SSO connector to basically the non-custodial wallet, so you can transfer money seamlessly from basically your eToro account into a non-custodial wallet, and then actually trade tens of thousands of crypto assets through DeFi swaps versus only 200 on eToro. But 200 is actually a lot. And of course, new markets such as prediction markets and coming soon perpetuals as well.
How do you distinguish, at least in the US, between what maybe Kalshi and Polymarket are doing with prediction markets? And I mean, this is a really crowded space.
First of all, nothing is really crowded when you think of the entire TAM, right? So the entire TAM, we're still very, very early stages of the largest transformation of wealth in history. You think that we're talking about $100 trillion moving from older generations to younger generations?
Yeah, that's outside of not just prediction market. I mean, that's the whole great wealth transfer.
I think it's appetite, it's risk appetite and type of new products. And one of the reasons we did Zengo is we noticed we have Gen Zers who are actually very interested in living on chain and doing a transaction on chain. I think that's where a lot of the ecosystem is. And when you look at the different products that we've been launching in eToro, it's about making sure that customers on eToro can stay on eToro, whether they want to trade stocks or commodities, or whether they want to actually trade crypto or actually copy somebody else or invest in alpha portfolios on eToro, or spend their money with a Visa that's connected to the account. So what we're building is a financial super app that provides you access to any type of financial product that you want within the eToro ecosystem.
All right. Well, speaking of crypto, Yoni, we got to talk about that since that seems to be a little bit of a weak spot for your most recent earnings. But I mean, what's the outlook in terms of the revenue from that market, and really just outlook for the market directionally moving forward?
I think we're seeing, crypto yet in another super cycle. Everybody's talking about the 4-year cycles of crypto. We launched it in 2013, boom, crashed 85% in 14. We had huge amount of revenues in 2017 coming from crypto, a huge crypto rally, boom, a crash in 2018, 2021, 2022, now 2025 and 2026. So it does seem it works on a clock of a cycle, maybe a self-fulfilling prophecy. And I have no doubt, I'm a very big believer in Bitcoin as digital gold, that we are going to see Bitcoin going way beyond the all-time highs that we've seen in October. But it might take time and people to adopt to these technologies.
Real time, what are you seeing as a result of the cold card wallet hack made by Canada-based CoinKite, the crypto that was stolen?
It doesn't have any impact on eToro.
Are you seeing more people invest in Bitcoin ETFs?
We're seeing actually more people moving to non-custodial. So we actually have seen people coming into eToro, depositing crypto in eToro, into Zengo, and then from Zengo into eToro. We actually are one of the unique firms that are now introducing crypto buying power as well. So you can actually come to eToro, bring in your crypto from basically, either non-custody or custodial wallet, and then get from us a margin or buying power to buy stocks as well.
Are a lot of people doing that? It's kind of, could be risky.
Risk return. We believe in educating people about the markets.
Yoni, always good to see you. Appreciate the update on what the retail investor is doing. Yoni Assia, co-founder and global CEO of eToro, joining us here in the Bloomberg Businessweek studio. Once again, shares of eToro under a little bit of pressure today, down right now by about 13% after the company reported its latest results and that acquisition of TradeZero. Taking a look at markets in general, though, the S&P 500 moving lower, down by about 0.4%. The NASDAQ Composite down 0.8%. The Dow down 0.2%. Coming up next, we speak to Vice President of the Americas over at Wärtsilä. We're talking industrials next on Bloomberg Businessweek Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ, all in the red right now. A lot of people refraining from making big bets ahead of tomorrow morning's CPI report. But bottom line here, stocks are lower. Worst level of the day right now on the S&P, down 31 points or so from a record, down 0.4%. Now it's 77.22. We've got the Dow down 142 on the industrials, down 0.3%. NASDAQ down 218, dropped there of 0.8%. The Russell 2000 index, though, of small cap shares, it is advancing up now by about 0.5%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, also higher today, up by about 0.3%. The 2-year 4.21%, with the 10-year 4.68%, the 30-year 5.23%. Gold down $21 the ounce, 43.69, dropped there of 0.5%. West Texas Intermediate crude, 83.24 an ounce. A barrel, 83.24 a barrel on WTI, up by 1.3%. Brent, 88.85, up by 1.3%. This is investors keep a close eye on developments out of the Strait of Hormuz. Company news, Bumble shares, let's talk dating apps, up by 0.5%. Bumble will allow men to make the first move in messaging on its dating app, marking a major reversal from the company's signature Women Go First model as it seeks to court younger users and deliver on a long-promised turnaround. Again, recapping here, we got Bumble up by 0.5%. Tim and Kristine, that's a Bloomberg Business Flash.
All right, Charlie with the updates for Bumble. Appreciate that, Charlie. Okay, Bumble getting some attention. Industrials getting a lot of attention. Thanks to the CapEx supercycle that we're seeing as a result of what many are calling a revolution in AI. Wärtsilä is one of the global companies operating in the space. It's based in Finland. It provides tech for the marine and energy markets. Think power to data centers and more. The company is traded on the Nasdaq Helsinki Stock Exchange. If we were to convert the euros to dollars, it would be about a $20 billion market cap. We've got with us Risto Paldanis, Vice President of Americas for Wärtsilä. He joins us from Finland. Risto, good to have you on the program. We wanted to talk to you because you've got this new analysis out that talks about a disconnect between what we're hearing from data centers on the planning side and the realities of the grid. You argue that the Americas are speeding to powerless, building data centers faster than the infrastructure needed to run them. How serious is that mismatch today, and when does it become a real constraint on AI growth?
Hi, thanks, Kristine and Tim. Thanks for having me. Absolutely, we're seeing a lot of developers developing AI data centers across the country. However, right now, we strongly believe that it's not just a data center technology story, it's truly a power story. And the companies who can actually manage the power side, they will have actually a real advantage and actually are able to hit the ground and the deadlines they need for the data centers to be operational.
Now, Risto, I am very interesting, right? So it sounds like what you're saying is basically who can control the power will be the haves in this trade moving forward, and those who can't will be the have-nots. But, what at this point will set these companies and the players in this space apart? Like, who has the best advantage when it comes to being able to maximize control over the power at this point?
I think it's the companies who can have done before already power plants and understand the power business. We are looking at two very different businesses here. We're looking at the data side and data side on hyperscaler, one of the fastest moving businesses in the world. And then you're looking at the traditional power generation, utility transmission side of the business, which traditionally is very slowly moving. And people who can combine these two worlds, they are probably going to be the winners. And right now, people who understand the power are certainly having an upper hand.
Yeah, that's a very interesting model, the macro grids combined with on-site power generation. Is that something that you expect to be a permanent part of the power mix for large AI campuses, or could an alternative be found eventually?
I think right now, only very small percentage, maybe a few percentages of the data center operational today are actually off-grid, behind the meter, as we call them. But in the future, and if we look at some of the data available on the projects that are being developed by 2030, we strongly believe that number can flip to half of the project actually will be behind the meter, where the data centers are having their own power plants and power sources.
Is anyone getting this right today when you look across the landscape of the US, Latin America, Europe, Asia? You have this global view. Which markets have the best combo of data center demand, power availability, and regulation? Where do you see that?
I think by far the US is the leading country in this perspective. The data center sizes are tenfold in US compared to any other places in the world. So we're talking about hundreds or gigawatt size of projects and data centers, and that's not really happening anywhere else yet. So the challenges that we're seeing here first faced here, and I hope also the other countries are able to learn some of the learnings from US when they start to be on the same level of the sizes.
Yeah, well, very interesting. What can you tell us about what we're seeing in terms of the pace of data center construction in the US? If it is indeed the model for the rest of the world, what are they doing right? What are they still kind of maybe getting not so right at this stage of the game?
Yeah, I think the ones that are truly coming early and data centers, of course, you need a land, you need a gas, and you need a fiber. And there is a good examples of states where these are plenty available. But then the ones who are really talking to the OEMs and the thermal power plant suppliers early enough to secure this capacity for their project, they will certainly be the winners.
Risto, we've spent a lot of time talking about some of the constraints that we're seeing when it comes to power generation technologies on site. A lot has been focused on gas turbines and the challenges in that market. Like if you want one of those, you're going to have to get in line and wait many, many years. What share of the opportunity do you think reciprocating engines can capture versus those gas turbines?
Yeah, I think, the reciprocating engines RISE, as we call them, they have become more and more known as one of the key elements in a power system and power generation. Earlier times, there have been a backup on smaller power plants, but right now, for example, the largest plant we sold today in the US is 790 megawatts. So it's a massive power plant, and we would like to call that, the engine power plants are like a Swiss Army knife. They are very modular. As you saw in the pictures, they can be built in 100 megawatts blocks. Over the years, then data centers are being built and scaled up. It uses natural gas as a fuel, and it has incredible technical flexibility characteristics, which the other technologies don't really have. And of course, in the debate, there's a lot of debate on utilization or usage of water. Our technology uses closed loop cooling water system and therefore doesn't consume water at all.
Now, Risto, tell us about what you're gleaning from your energy orders, because that seems to suggest demand is already very much ahead of production capacity. How would you as a company decide how quickly to expand without overbuilding the infrastructure if, the cycle does eventually catch up?
Thanks for that. And yeah, just like some of the others, we have announced already a few times this year that we're expanding our manufacturing facility in Finland. So we're certainly trying to catch the boom here. We're looking at the global markets, of course, from our side. We're not only serving US market, but globally. Thermal generation wasn't that popular. Maybe it's more renewables than it was energy storage. But now people are starting to realize that you actually need dispatchable, firm, flexible power in the power systems. And in US alone, if you take the retirements of the different power plants, you need to replace those. Then on top of that, you have increase of demand. And already these two together are decent market size for all of the players. On top of that, then you have this incredible AI boom and data center boom. So I think there's plenty of market for years to come for a lot of players.
Risto Peldonis, Vice President Americas over at Wärtsilä, based in Finland, but I believe Risto is in the opposite of Finland, which is Florida, and that's where he is joining us from today. Risto, appreciate your time and sharing with us everything regarding data center power generation. Coming up next on Bloomberg Businessweek Daily, stocks on the move on a day when the S&P 500 under some pressure, down 0.4%.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Businessweek Daily. That is not Carol Masser. That's Kristine Aquino from the Markets Live team over at Bloomberg News. She's filling in for Carol today. And what a good day to be filling in. Thanks for jumping in.
Thank you for having me.
Oh, yeah.
Great day in
we are
markets.
happy to have you.
Yeah.
Great day for markets. Well, great day to be in markets, I guess, is every day.
Yes.
But I wouldn't say great day if you're long these markets. The S&P down 0.3%. The NASDAQ Composite down 0.7%. The Dow down about 0.3%. In the S&P 500 right now in terms of industry groups that are moving. Perhaps not surprisingly, you're seeing energy, one of the few bright spots, as we do see oil prices move just ever so slightly higher. Energy up 0.8%. Utilities up 1%. Industrials and financials are also in the green. We've got communication services, consumer discretionary, and real estate all leading the industry groups lower. I mentioned oil because we're watching what's happening out of the Strait of Hormuz, but the price of futures for Brent up to $88.84 is still shy of $90 a barrel for Brent futures, but still up another 1.3%. Also up 1.3% is WTI crude. That's up to about $83 per barrel. Kristine, what do you have your eye on a day like today?
I mean, I'm always a macro markets kind of nerd, so I've been keeping an eye on, deals really. Have been kind of being whipsawed by what's happening in oil, but it also seems like increasingly sensitive to the path of interest rates. And I've been hearing the street, the September meeting for the Fed is increasingly live just because, the Fed has indicated they're going to be data dependent. They don't want to front run markets. They actually want markets to tell them what they're thinking, and then they're going to act on it. So, yeah, a lot of people prepare for a live September meeting.
Yeah, we'll see what happens in Jackson Hole, too, and the way that Fed Chair Kevin Warsh uses that as an opportunity to communicate to markets post that press conference that we got from him a couple of weeks ago. So, he's still early on in the position, but and this will be his first Jackson Hole as Fed Chair. So curious to see what he has to say about that. I'm Tim Stenovec along with Kristine Aquino. Let's take a look at some stocks on the move today. We're joined by Bloomberg News Equities reporter Avalon Purnell. Hey, Avalon.
Hi. We have to go ahead and start off with Apollo Global. That's ticker APO. They're currently jumping about 6.3%, most intraday in more than 4 months. And that's after Nvidia tapped the asset manager alongside a slew of other firms like Blackstone and BlackRock to source $500 billion in financing for AI development and infrastructure. Apollo's sports arm also inked a $2.6 billion financing deal with the New York Yankees as well. So definitely had to bring something in from our backyard. Proceeds will be used to support the growth of the Yankees and also refinance some of their existing debt.
Yeah, a lot of those sports deals, very hot these days.
Yeah, I want to dive into this this Yankees deal a little bit. Silas Brown writing that, as you mentioned, Avalon, $2.6 billion of financing to the owners of the Yankees, consisting of debt and equity. The proceeds are going to be used to support the growth. The Steinbrenner family retaining full control of the Yankees. Hal Steinbrenner says the partnership allows them to explore pursuing strategic opportunities. Like you said, Kristine, the money in professional sports is unbelievable.
Yeah.
And it looks like a lot of these alternative asset managers are increasingly getting involved.
Yeah, absolutely. And they're household names as well. So a lot of popularity. All right, Avalon, tell us what else you got.
Next up has to be Webtoon. Not as good news there. That's ticker WBTN. It's currently falling just about 11% to hit its lowest intraday level since last May. And that's after the Korean web comics platform forecast third quarter revenue and adjusted EBITDA that trailed Wall Street's expectations. Though, to say the least, the analysts were a little bit mixed about this as well. JP Morgan actually defending the company, noting that while the third quarter guidance does come in a little bit softer than anticipated, Webtoon still has a really promising pipeline of underlying developments that could help them exit the year still at a high.
Are you guys Webtoon people? Like, is this on your radar as consumers?
Some of my friends are really into it. I haven't actually pursued it yet.
Yeah, I'm not. I can't say this is, but apparently, like, it's huge with younger kids. Like,
that's none of us in this room right now, unfortunately.
I don't know. Like, I've spoken to people who are like, oh yeah, this is totally in my house. Like, this is something that is definitely on our radar.
So it's a saver for parents entertaining their kids.
I think the kids are a little older and they're kind of like entertaining themselves at this point. But like, when I first heard of this company, I was like, what is this? And I started looking into it, and it's apparently the content is incredibly popular. Okay, Sophie in our control room is a big fan of the company. Okay, that's good to know. Webtoon, WBTN is the ticker. And your final one is one that is new to the public markets.
It is Bending Spoons. That's ticker BSP. I remember we actually covered it when they first came onto the markets. Now currently jumping about 6.7%, though earlier it was up as much as 15% to hit an all-time high. And that's after Mizuho boosted its price target on the company to a street high of $72 ahead of Bending Spoons' first earnings report after going public. For those unfamiliar, this is an Italian company that pursues a sort of private equity-esque style playbook to buy distressed software apps. Most notably, at least recently, they just bought Airtable for about $2.25 billion, which is far below their earlier peak value of about $11.7 billion. And that is definitely part of why Mizuho upped their price target.
Yeah, they basically take all these like Web 1.0 companies that we used. Well, I'll say not we. I used when I was in my 20s.
No, I'm with you there, Tim.
Okay, cool.
Yeah.
We used in our 20s, and they buy them, and they own Vimeo, AOL, Brightcode.
You're speaking my language right now.
Eventbrite. Yeah. WeTransfer, and more. Okay, Bending Spoons, the ticker BSP. Avalon Purnell with today's Stock Movers. For more conversations like this, check out our Stock Movers podcast. You can find it wherever you get your podcasts. Coming up next on TV, it is The Close. If you're sticking with us on radio, YouTube, or Bloomberg Originals, Bloomberg Businessweek Daily is next.